What's going on, guys? My name's Amish. I go by APJ, and you are seeing a video recapping trades I've taken live on stream. So I trade every morning at 8:30 Central, 9:30 Eastern at the New York Open, and we trade for, depending on the day, 30 minutes, an hour, sometimes 2 hours, depending how price action is and what setups we get, right? So I'm going to go over the setups I've taken and proof of live execution, right? So this is going to be raw, uncut. I'm just going to be reviewing in real time right now, and you're going to see trade for trade my thinking, my reasoning, why I'm not taking certain setups, and of course the executions that corresponded with all of these live trades. So live trading is a feature that I give to you guys every single morning at the open. It's voice and video, so you can hear my thoughts while I'm in a trade, before I get in a trade, and you can obviously see my executions in real time. And if you choose to follow along, this is how it would pay off. So this is Monday, October 13th. Today is currently the 27th, so 2 weeks later. Here's what we get at the open. All right, so this is our opening candle. Again, I only trade the open because that's the most volatile time in the day. And that's when I want to be trading, right? Smart money is rushing into the market. We're seeing manipulation. We're seeing distribution. There's not too much of a lull. So this is a 1 minute chart. I do take entries on the 1 minute and 30 second when I have that higher time frame confluence. So something you won't see in this video, because I'm obviously doing this in replay mode, is higher time frames. So charts like the 4 hour, the daily, the 1 hour ES. I have all of those charts up. Then I also have the 15 and 5 minute up on NQ. But for simplicity, I'm just going to go over the trades on the 1 minute right now. Again, so I use multi time frames, probably about half a dozen, and I take entries on the 1 minute and 30 second. But right now, for this video, we're just going to look at the 1 minute. All right, all that out the way, this is the open on Monday, October 13th. As you can see, price comes up a little bit, but quickly sells off, continues to sell off, and pushes down and sweeps this low here. Now, this was major sell side liquidity, right? We had multiple lows, but this final low is where we see a reaction to price. And this was our post midnight low. So London session low was swept right here. We form a 1 minute fair value gap here. All right, and I'll do my best to make that clear. So there's that 1 minute fair value gap. Price pushes up. We don't initially close within it, right? We just close, we don't close above. We just close within it on the first tap. But shortly after, we do close above. And this is our 1 minute inversion long. Now, when we take these inversions, what I'm always targeting is either internal liquidity or a fresh opposing fair value gap. So in this case, this fair value gap here, it is fresh, meaning it's untapped, right? Price has not reached that yet. So this is where I'd be looking to take profit. Now, on this trade, we took an entry on a retracement, and we took an exit at the fresh 1 minute fair value gap. Our stop here was at the low of this 1 minute displacement candle, right? So this candle that initially sent price higher. Now, you're going to see 0.7, 0.8, 0.9, and sometimes 1-to-1 or just over 1-to-1 risk reward. That is more than enough for this system. Our win rate over a long time frame is 89%, right? So we had 20 trading days in which we had a 90% win rate. Those are all trades taken live. So don't let less than 1-to-1 risk reward scare you away. It really just comes down to math and expected value, right? Your win rate times your average risk to reward. How does that play out for you? And it's much easier for me to produce that high win rate with a risk reward like this, because these are chart-based stop losses, right? I'm not doing a fixed 1-to-1 risk to reward ratio, and you'll see why here in a second. I always do stop losses based on the chart because I want various factors protecting my position. So in this case, my stop here is at the low of this 1 minute candle here. Okay, so that's where the stop is. We take an entry on a little bit of a retracement. So on this candle, we are tagged in. We let price play out, and notice how close we come to getting stopped out right here. Okay, this is the importance of stop placement with logic behind it. I'm not just doing a fixed 1-to-1 risk to reward. If I did, I would have been stopped out. It's easy in hindsight to say, oh, your stop should have been here or there. But in real time, when we're actually taking these trades, I'm telling you guys where my stop is and why it's there. In this case, for the second time, it was at the low of this displacement candle, and it was perfectly placed, right? We didn't get stopped out. Price did not need to go all the way down there. And as you can see, we're back in profit. And on the next candle, watch closely where it goes first. I know it closed bearish, but look at that. We had a perfect exit. So perfect stop placement and a perfect exit. Now, if this looks too perfect for you, look to the left side of the screen. This was the trade in real time. Okay, so I bought this close right on the 1 minute on a retracement, and actually had 0.79 risk reward when it was taken live. Stop was right there. Okay, and then our exit was at that fresh 1 minute fair value gap. That's in real time. Right, this candle was still open, as you can see, 34 seconds still on that 1 minute. That's why it looks bullish when it closed bearish, but we had our exit, we were out, we took our profit before it came back down. So I'm going to go through this a lot quicker now. Just want to get you guys familiar with my stop placement, my entries, and all that good stuff. So that was our first trade on Monday, October 13th. We're going to go through this day by day and speed run it and just sort of same thing, explanations and whatnot. So the next trade on Monday the 13th, it was another long. However, this trade was on the 30-second. I can't pull up a 30-second chart on TradingView. I have that only on my trade of 8. But essentially, the trade was a continuation, right? So price had, this is after, we took our first long. We established a bullish trend, right? We came down, we tapped a discount of our leg up, right? Reacted bullishly, respected 2 bullish 1 minute gaps, this upper one here, this lower one here that I just drew out. And then in this sequence here, we had a bearish 30-second fair value gap form on this 1 minute candle. So anytime there's a bearish fair value gap and we're in a bullish trend, we're looking for a close above that for a continuation and a long back in trend. So if you look again to the left side of the screen, this was our trade. We took an entry at about 8:01 and we took profit at this recent high. Stop was within this 1 minute 1 minute fair value gap, right? This is how the trade ended up looking. So that was 2 trades on Monday. Both were longs. Both were terrific. The first was sort of at the bottom, right? Perfect entry, perfect stop placement, and a great exit there. And then the second trade was a continuation after price had continued moving up, right? And as you can see here, go straight to profit. So that was Monday, 100% win rate, 2 trades. First trade being a 1 minute inversion long, second trade being a 30-second inversion long. Now, Tuesday, October 14th, we will jump to the open on that day. So this channel you're seeing to the left in our Discord server, this is where I post executions, right? It's not the live trading room. The live trading room is on voice and it's on stream, so you guys see all that. This is just where I come in and I log our trades, right, for research and back testing purposes, right? That way you guys have access to them and can study them after we've already taken them. All right, this is the open on Tuesday. We took our first trade a little later, about 20 minutes into the open. Sometimes we do wait, a good 10, 20 minutes, whatever the case is. Being that we're trading such low time frames like the 1 minute and the 30, discretion is key, right? The biggest risk in our system is over trading. So that is why I have half a dozen time frames up, because I need that confluence, I need that higher time frame narrative and bias to be aligned with my lower time frames, right? So on, for example, Monday, those trades we just went over, we had swept London lows. That was our confluence for reversal. We got our longs. When you're just too zoomed into the 1 minute and the 30-second, you're going to start over trading, and there's way too many signals, right? There's 61 minute candles in an hour. Obviously, there's 120 30-second candles in an hour. There's bound to be lots and lots of signals. So don't just get too zoomed in there. All right, so our first trade here on Tuesday, October 14th, we have this 1 minute bearish fair value gap here, right? Price did not close above. Be very cognizant of when we close above versus when it's just an edge close. In this case, this is just an edge close. It's not above. So that is not actionable for us. Now here on this next candle, we finally do close above. Our draw on this trade was a fresh 5 minute fair value gap. That fair value gap begun, I believe, right here. Yeah, right there was the start of this fresh 5 minute. Going back to what I just said a few minutes ago, we target either internal liquidity or fresh fair value gaps. Anytime price creates a fair value gap in a trend, so in this case, we had a sell-off at the open, we created a bearish 5 minute fair value gap, and we reverse when we have a reason to reverse and draw higher. Those fair value gaps need to be rebalanced, because at the end of the day, fair value gaps are imbalances on that time frame. So that's why we use them as targets and exit points in our trades. This trade looked something like this. We had our stop at the mean threshold of this 1 minute order block, right? We bought in on a little bit of a retracement, and then we exited at that fresh 5 minute fair value gap, just like this. So we're tagged in right here, had a perfect entry, as you can see here, and we got out at this 5 minute FVG, right? So if we throw up a fib halfway on this 1 minute order block, that is where our stop was, exit at this fresh 5 minute fair value gap, 15 points. That's terrific. You know, we're trading a mini, 2 minis, depending on your account size. You know, that's $300, $600 off of one trade, just like that. So that was our first trade of the day on Tuesday. Right, second trade on Tuesday. This was a 30-second trade, so I'll just show it to you here on the left side of my screen. I'll fast forward a bit in price here. Somewhere. Okay, so it was in this sequence here. We had a 30-second bullish gap that was formed up here, right? Price had obviously swept a ton of highs right here. We were in a premium on all time frames, right? So New York session, we were in a premium. We were in a premium of our daily range as well. So shorts were better risk reward than longs up here, right? But we waited for confirmation. We weren't trying to short all this nonsense. This is not confirmation of a reversal. As you can see, price continued up higher here. And then once we had swept all of these highs and some pre-market highs here, we had a confirmation for a short. So that short was a 30-second bullish inversion, as in like a bullish fair value up here that was formed on the 30, got inversed. We took a short, as you can see on the left side of my screen, 1.21 risk reward. This was phenomenal. Stop again was at the mean threshold of this 1 minute order block, so halfway. And we took profit at this internal swing low right here. Beautiful. So we were in here, price distributed to the downside. As you can see, this was about 2 weeks ago, so forgive me. I'm kind of recapping all of this, but live execution arrows here on Trade of 8. And these were all taken in real time, right? So Tuesday, October 14th at 9:32. These were real-time executions. For anyone who doesn't know, I'm in Texas, so this is Central, 9:32 Central. That corresponds with 10:32 Eastern, right? I'm an hour behind New York. But generally, when I'm referring to the market, I'm speaking in Eastern Standard Time just for simplicity's sake. So Monday and Tuesday, 2 trades each on those days, 100% win rates, right? And both days done within an hour. Moving on to Wednesday, we'll look at a stop out. This is real trading, right? This is not anyone who tells you they have a 100% win rate, they're lying. Everyone takes losses, and we certainly do every now and then, but those losses are never trades we regret, right? We don't take trades that, you know, don't have that A+ criteria, because even an A+ trade, it will get stopped out, right? The market is not a guarantee when it comes to setups. So as long as we do everything right on the process side, the outcome takes care of itself, right? If we stick to A+ setups, you know, we have that higher time frame narrative, we have that lower time frame precision, our stop is good, our entry is good, the rest is up to the market, right? Unfortunately, we do have a very high win rate, but every now and then we take losses, and that's absolutely fine, right? This is not a business of trying to be right every single day and trying to go for home runs every day. It's really about week to week, month to month, quarter to quarter, and of course year over year. Are you making money, right? Are you getting your payouts? That's all that matters at the end of the day. So fast forwarding to Wednesday, October 15th, we'll look at that loss. All right, this next candle is the open on Wednesday the 15th. So we had some interesting action here. Price sold off a little bit, and then it came back up into this fresh 1 minute fair value gap, right? And then continues to sell off. We form another bearish 1 minute gap right here, as you see. So our eyes were on this gap. As you can see here, we did sweep liquidity. Okay, so this was a sell side sweep. Our objective has been hit. We don't see a bearish draw pulling price down any longer. So now we begin to look for some longs, right? And what do we get here? We get a 1 minute inversion. Okay, so here is our long entry, right? This is an objectively good setup. We buy on a bit of a retracement. We're looking to get out just at these wicks, right? before this 1 minute fair value gap with a stop down here at the low of this displacement candle. So 0.84 risk reward. We're tagged in on the next candle. We're in. Okay, so price hovers, and then unfortunately it just comes down. It wasn't ready, and that's absolutely fine, right? We let the probabilities play out. Over the course of 100 trades, we're going to be super green. It's not about trying to be right on just one specific trade. So this was Wednesday. That was our first trade of the day. We had 2 more trades on Wednesday after that. This next one is a 30-second long. Let me try and fast forward to that. All right, so this is when we had our long signal. There was a bearish 30-second gap that formed in this little sequence, something like that, we'll call it. Again, I wish I could show a 30-second, but TradingView, I only have minute charts, right? I look at the 30-second on trade of 8 when I'm actually executing in real time. It's after hours right now. But this was what the long looked like on the 30-second, right? So stop was within this lower displacement candle. We took an entry on that 30-second inversion to the upside. We obviously have a bullish trend. Price is respecting this lower 1 minute gap, and we get that delivery. I had accidentally messed up executions here, right? I was sort of in and out. I misclicked, but when we got the setup, I was in that, and we got that on live. So that was our second trade on Wednesday, right? First trade was a loser. Second trade was a winner. We ended up taking one more. About 30 minutes later, I'll let it play out a little bit. Excuse me, this was much later, I guess. About an hour later. So 11 Central, which is noon Eastern. Just before lunch hour, we got this set up. This was a 1 minute inversion long, which you will see. I believe it is one of these candles. All right, so this 1 minute bearish gap forms. Notice the liquidity sweep here. We swept our New York low, right? So the low that was formed this session after the open, you know, we saw price go up and then come all the way back down and sweep that low there. We have that freshly formed bearish 1 minute gap here. Price comes up. Now, you know, I would have liked an entry on this lower 1 minute fair value gap being inversed. However, as you'll see right here, or maybe the next candle right there, one of these candles right there, we overshot this one. So it's all good. You know, we ended up getting this close at this upper 1 minute fair value gap. This is another target that I really like, so pay attention here. I love to target trendline liquidity like this. These are consecutively lower highs, right? And these act as, you know, just great targets for longs. As you'll see here, we took this trade on a slight retracement, right? And we targeted these highs here. Just trying to line it up so it was as I actually took it. So entry was something like that. Stop was within here. You know, we're tagged in on the next candle here. And then beautifully price distributes to the upside, and that is our exit. So that was our third trade on Wednesday. So 67% win rate on Wednesday, but Monday was 100%, Tuesday was 100%, Wednesday was 67%. Still very, very solid, right? One loss in 3 days of trading. It's absolutely a great number to produce. Jumping to Thursday. Jumping to Thursday, as you can see, the date is still October 16th, so Thursday. This is 1 minute before the open. At the open, we move up, right? As you can see here, we took out some internal buy-side liquidity there. And then price reacts and actually rejects that. Ends up coming right back down, as you'll see here, and takes out... Oh, I skipped forward a little too much here. It takes out our New York low. So New York low that had formed, you know, just a few minutes prior. That was the low on the session. So smart money pumped, sold off. We swept New York low here. right? And we had formed a 30-second and a 1-minute gap right here. This is the 1 minute. It's small, but even a small fair value gap is an imbalance, right? So it's valid for an entry, whether it's 1 point or 10 points. However big the fair value gap is, if the context is around it, it's still a valid method for entry. On the next candle, as you see, we got that 1 minute inversion. If we buy that, so this risk reward calculator, as you can see, my first entry was on this 1 minute close. My second entry was on the 30-second close because the 30-second actually had another gap up here. So I put on half of my position here on the 1 minute, and then my other half a little bit later, about 30 seconds later. And again, just like we talked about in that last trade, targeting trendline liquidity, right? These are consecutively lower highs. There's buy stops placed at each one of these levels, and smart money loves to target these highs. So this is a truly A+ setup for us. As you can see here, at my first entry, I'm looking at about 30 points with my stop down here. And then second 1 minute candle, it does distribute. I'm in my second position by then, so my average is a little bit higher. I trail my stop a bit. Still looking to get out at these highs right here. And on the next candle, we get that follow through and I'm out. This is a terrific trade. So taking this with, 2 minis, that is $800 of profit off of a simple 1 minute and then a 30-second inversion long, right? Just because the context is there. We swept New York low, and a lot of traders won't take trades because they don't have the confidence, or, this looks like chop to them, whatever the case may be. But, after 2 years of refining this strategy, it's sort of like I can think of it and see it, and your brain starts to recognize those A+ setups, right? And that's really my goal with the group, right? Being on stream, yes, you guys have the opportunity to see me trade live and follow along, but I really want you guys to start recognizing A+ setups with me, right? Being able to say, this is an A+ setup before it plays out. We're putting risk on here. We'll see how it plays out. And then, memorizing those conditions prior, right? Getting that ingrained into your brain. That's how you become profitable in the long run. Instantly recognizing those A+ setups, and also recognizing subpar quality setups and knowing to stay out, right? If you could avoid unnecessary junk, that's how you produce that really strong win rate. So that was our first trade on Thursday, October 16th. I believe we took one more. Yep. By the way, included in your free membership, you get access to Outlooks, which is a channel that I post my pre-market outlook every day before the open. And this trade aligned perfectly with my outlook. So, everything goes together, right? Analysis and execution. It's not beneficial to just have one side of the nail down. You want both sides down. You want to be a great analyst and a great trader, and that's how you truly make money. So our second trade here on Tuesday was not too long after price. Okay, so we established our range here. Came down and swept. Let me make sure I have all of this right. As you can see, the execution is here. So first trade, execution right there, right? Entry, exit. Our second trade that we're going to go over right now, we had established our New York high and low. So high of New York session was here, low was here. So we wick up into it. Yeah, we tap this fresh upper 1 minute. Okay, so this is a bearish PD array. We're looking for a reaction to that. We stab up into a premium again, reject that same 1 minute gap. All right, and in this sequence, we form a bullish 30-second gap. By now, we're looking at bullish gaps when the context is bearish as a way to get in. So the 30-second gives that inversion to the downside, right? Our stop goes just into, I believe, entry. Okay, so by this time, again, without saying too much, without saying anything unnecessary, this is a 1 minute candle. So just remember, if it's a 30-second entry, our entry is halfway through this candle. So we're not entering all the way down here. Our entry was something like this. It was 6.3 to be exact. Right there. Our stop was just into a premium of this New York range, right? And at this 1 minute high. So we would let price tap equilibrium again if it needed to. We were looking at an exit at this internal liquidity. This all played out in this single 1 minute candle. Right, so close to, in real time, we took 1.03 risk to reward. That's phenomenal, right? So 2 trades again on Thursday. At this point, that's 2 Monday, 2 Tuesday, 100% win rate, 3 on Wednesday with a loser, and 2 on Thursday, both winners again. So phenomenal 4 days there. All right, and finally moving on to Friday, October 17th. This was a trade we only, this was a day we only took one trade, and you'll see why here. This was a great way to end the week. And generally on Fridays, my approach is fairly conservative because I want to protect profits from the week. By Friday, we are nice and green on the week, right? So if we do the math real quick, pull up a calculator, we took 2 trades on Monday, 2 trades on Tuesday, 3 trades on Wednesday, and 2 trades on Thursday. So we had taken 9 trades on the week. 8 of those were winners. So 100 divided by 9 times 8. Thanks. Well, did that wrong. 100 divided by 9 times 8. We're currently at an 89% win rate 4 days into the week. So my goal isn't to be risking those profits, right? Anytime we take another trade, we'd be risking profits made that week. So Fridays, generally I'm conservative, and like you'll see here, I only took 1 trade on Friday. So this is the open, right? Price moves up a little bit here. We sweep these highs from London session, right? We still have Asia highs over here, but London highs swept. And then we get a 1-minute inversion. Now, I didn't take this 1-minute inversion. I'm not going to lie and say I always get the most perfect entries in the world. I don't, and I didn't take this because we had a lower 30-second fair value gap. So that 30-second FEG was something like this, right? I did not want to take that because I'd have to go risk off. I don't know in real time if price is going to react bullish to that or not. So I would rather wait on that 30-second to be closed below and get a worse entry, but higher confirmation, than risk taking that trade and just getting a complete reaction and reversal that would stop us out. You know, I don't worry about missing trades. The beauty of trading the 30-second and the 1-minute is that setups occur very frequently, right? Every day we show up, we get trades, right? It's not like we show up and we don't know if we're going to trade that day. We'll get the setups every day. It's just, again, about that discretion to know which setups to take and not to take. So I didn't take this 1-minute inversion. Like I said, I took this lower 30-second, targeted this internal swing low, got in on a little bit of a retracement here. Stop was just right here at the high of this displacement candle, like that, right? So we're short here, and beautifully, price takes out our target. Virtually no drawdown there, and that's how we ended the week. So this was a 10-trade week with 9 winners. That is, right, simple math. That was our win rate for October 13th through 17th, right? This is the beauty of this model. When you have so many confluences, when you have that higher time frame narrative, you have fair value gaps that you're targeting, you have liquidity sweeps, you understand the manipulation sequence of the day, and then you have that lower time frame precision, you can really produce this win rate. And again, all of these taken in real time. Okay, execution arrows, trade of 8 there. Every single trade, taken in real time on voice. Okay, so I'm usually in voice 10 minutes before the open, just kind of going over my pre-market plan, all that good stuff, and then we get to work. 8:30 bell rings central, right? New York Open, we start working, and these are the fruits of our labor. Guys, I'm running a 7-day free trial. If you would like to experience this live trading room with us, you know, join it, right? Absolutely no obligation on your end. If it's not for you, go ahead and cancel. No hard feelings whatsoever. But if you're someone who takes your trading seriously, you're looking to improve, and you're looking to learn from full-time professionals, this might be for you. Join it. 7 days free. If you don't like it, cancel. But my odds are that you will love it and you'll want to stay on. Whether or not you do or don't, it's completely up to you. We have a ton of free resources as well as premium resources, right? We have the blueprint. That's a 40-page course that goes over all of this stuff in detail. That's a premium exclusive resource. We have weekly classes, right? We go over reviews, and you guys actually get weekly biases and overnight outlooks as well, in addition to everything else in the free group. So if it's for you, if you're a serious trader, please sign up. I'd love to see you in the stream tomorrow morning. And, you know, let's get to work.